Hi, my name is Joe Christie, and joining me is Xander. We're from Capital Property Funds, and this is the July 2025 portfolio update to the CPF Property Debt Fund. To kick off, Xander, can you please tell us about what's happening in the land subdivision category?
Perfect. So I'm going to start off with Spring Creek. For those who don't know, it's located in Beaudesert, Queensland. It's an 800 land lot estate. We've got 4 current loans with Spring Creek. So we've got Spring Creek Stage 6, Spring Creek Stage 5, Spring Creek East, and Spring Creek Land. They're all paying 10%. For those invested, we've got Spring Creek Land expected to repay in August, and we'll send out some information about what that might be rolling into shortly. And then we've got Spring Creek Stage 5 expected in September, and similarly we'll be sending out some information about what that might be rolling into. So we're very excited with what's been going at Spring Creek. Stage 6, that's 62 residential land lots. Stage 5 was 25. So as you can see, that they're getting bigger stages, and that's to keep up with the demand there, because it's in very high demand. Terry can't make the lots fast enough. So yeah, we're very happy with what's going on at Spring Creek, and we look forward to providing more updates on it.
Yeah, just to add a little bit to what you just said is, I like the fact that they are developing residential land lots, so they're building something that people want, and there's a shortage of stock. First mortgage security, very good quality counterparty, and it's paying 10%.
Moving on to our newest land subdivision loan, which was Walloon. This was settled on the 28th of May. We've got a first mortgage paying 10.5%. And this is 15 residential land lots for 4,000 square metres, so an acre. So they're not going to flood the market there. And we're expecting them to get their works approval mid-July, and then for construction draws late July. So if you are interested in Walloon, feel free to contact us, and we can tell you a bit more about it if you'd like, and get you on an expression of interest spreadsheet. So really looking forward to some more updates coming for Walloon.
And then we move on now to Toowoomba. It's a first mortgage paying 11%. It's still in that land subdivision category, and the second mortgage paying 18%. I think it was, this is stages 5 and 6. It's around about 47 land lots. Can you give us a status update on what's been happening there?
Yeah, so timely that we're recording it now. We just had a call from Terry. So we've got the works approval for this one. So that's quite exciting. It's taken a little bit longer than we expected to get that. So we think this loan might have a little bit of a delay, 3 to 4 months. But it is Terry McKinnon, so he might be able to catch up a bit of time when they're doing the 47 land lots there. But definitely one that will have more construction draws coming as now they've got their works approval. So yeah, very exciting stuff there.
Well, my mother's in that one, so I'm glad there's a bit of delay. So
Perfect.
She's enjoying the 11% return.
Yeah. Moving into commercial, so we've got our newest loan, Brookwater, that's settling on the 2nd of July. We've got a first paying 10.5 and a second paying 18. We're very excited about this. It's a 130 spot childcare centre with some retail health space there as well. So there'll be more construction draws once this does settle. We expect that late July, early August. So exciting stuff there. If you are interested in that 10.5 and 18% for the second mortgage, they will be open again, both of them. So again, feel free to contact us about expressions of interest. But very, very happy with that loan, and looking forward to seeing that one being built.
And just before you go into the next one, I mean, you and I were on site a week or so ago. We met the counterparty of the borrower, really, really well credentialed. I think this is his 13th childcare centre that he'll be developing. We met the borrower, we met the builder. He was very strong. And there's also an agreement for lease with a reputable childcare operator for 15 years. So it really, we were very, very comfortable with it, and I think it'll be a cracking opportunity.
And moving on to Paddington, which is another childcare centre, and they've also got the underground 2-storey car park. So that's finished last 2 months ago, and then investors have had the opportunity to roll in to a new works approval loan. So for the next 5 to 6 months, they'll be getting their works approval for the next stage of Paddington, which is 12 luxury apartments. We've got the first there paying 10%, and the second paying 16%. So in terms of updates for that one, as it's a lot of more paperwork being filed, there won't be much to talk about. But when we do get towards that November update, I'm sure we'll have a bit more clarity on when that works approval might be coming, and then what the next when the draws will be, and moving in to a 12-month construction loan for that one. So a lot to. It's probably going to be quiet for now, and then we'll get a bit busier towards the end of the year. Anything to add on that one, Joe?
Yeah, thank you, Xander. Look, not too many moving parts, as you said. It's a stabilised loan. Rolls-Royce land at Paddington in Brisbane, nearly an acre of land. But what I do like about it is that you've got really good holding income. So they've got the childcare centre is now operational, 106 spots. Commercial car park is operational, so you've got income from that. And you've also got quite a large frontage to Given Terrace with restaurants and cafes and boutiques also providing income support. So a stabilised loan, really good income support, enjoy the income at 10% and the 16, and then once they get their works approval, we can look to provide a construction facility.
Yeah, very exciting. And then so we'll move into our industrial portfolio now. So we've got Tingalpa, first mortgage paying 10.5 and a second paying 18, 21 industrial units. Joe, do you want to tell us a little bit more about this one?
The counterparty has been excellent. So he's built a program, and we'll talk about some rain delays in a moment, but built a program when he's been able to get on site. And also his sales in marketing has been excellent. So he's got more than 100% of debt coverage. So what that means is that his committed pre-sales will, once they drop, will more than 100% cover the outstanding debt. And so that's encouraging. But there have been some rain delays. So it's due to expire, I think, July of this year. But we will extend that out for another few months to mid to late September.
Yeah, and just around those pre-sales, so there's 18.4 million of unconditional, and then there's 10.2 of conditional, and we've lent them about approximately $20 million. So that 28 million's more than covering it. And then Joe, after this project's finished, the sponsor of this project's moving into another loan. Do you want to tell us a bit about that one?
Yeah, thank you for reminding me. Yeah, so he's been a very good quality counterparty or borrower. So his name is Mark Drillich, and this has been, Tingalpa's been an excellent result for him and for us, one of our best performing loans. He's now also secured an industrial site in Oxley in Brisbane, where he'll do something similar. And that should initiate or commence around about August, September. So investors will have the opportunity to roll out of Tingalpa into Mark's next project if they so choose. And the metrics will be quite similar, sort of a 10% return for a first mortgage and between a 16 and 18% for a second. So we'll keep investors updated on the status of that Oxley program. But if anybody is interested to pre-register their interest in Oxley, simply contact Capital Property Funds and we'll have all the contact details at the end of the video. Perfect.
So that moves us well into our residential portfolio. So we've got Marcoola. Marcoola's paying 10.5% for the first mortgage. In Marcoola, any land over, or the houses over 500 square metres, you have an as-is right to split the block down the middle and build 2 dwellings there. So Terry's just received all the approvals he's needed. So we expect expect a draw in about 5 weeks for construction of the new dwellings there. So there'll be some action at Marcoola. And if you are interested in Marcoola, again, expressions of interest never hurt. And we look forward to providing some more updates in the next loan about how everything's going there.
Yeah, get in touch with us. Yeah, but just to add to what you said about Marcoola, you've got a really good quality borrower, first mortgage security. It's Marcoola, so its land there is very scarce, and you're getting that 10.5%. It's quite exciting. So yeah, that one's a good one.
And then moving into the final loan of residential, we've got Teralba. Teralba's paying 11% for the first mortgage. They're building 11 townhouses and 1 detached dwelling there. A little bit of what's happened since the start of the year on Teralba. There was 2 original houses there. They've knocked those down. They've merged the titles, and then they started civil works. Unfortunately, we had about 2 months of just horrible weather in New South Wales, which has delayed the project a little bit. We've got Rod Moynihan, who's our in-house development consultant, who's working with the sponsor of the project, Gary, there. So Gary and Rod are working to get this project back on track. It will be a little bit delayed just due to the rain we have had. We expect late April, early May for that loan to finish. But as Gary will tell you, Teralba has the highest house growth in Australia, I believe. So another 3 or 4 months there might do the houses are good, but yeah, no, everything's going well there.
Yeah.
We look forward to providing some more updates. We will have some construction draws for that one coming in the next month, as they've been doing some work there. So if you are interested in Teralba paying 11%, feel free to contact us and we can note you down for that one.
Yeah, well, just to add some flavour, I mean, as you said, 11% first mortgage security. We've also, one of the loan conditions is, Rod Moynihan attends all the monthly PCG meetings, manages all the construction draws. So, there's a lot of confidence investors can get around the feasibility of this particular project.
And then that leads us into the final category we're going to talk about, which is residual stock deals. We've currently got 2 on the books, Yalambi and Sanford Rise. Do you want to tell us a bit about what's happening at Yalambi?
Yeah, thank you, Xander. So Yalambi is located northwest of Brisbane, around about sort of 20 to 25 minutes drive outside of peak hour. It's actually, the Yalambi is the estate, but it's in the suburb of Bunya. Really good quality borrower, so I've known him for a long period of time. He's developed rural residential land lots, around about that 4,000 square metre in size. They're quite large, selling for between 1 million to 1.5 million, so aiming at that higher end of the market. And when we say it's a residual stock deal too, it means that all the construction has been completed, titles have been issued, so you've just got the residual stock, so the completed stock that needs to be sold down. So you've got no construction risk, it's just marketing risk. And sales are going well. They were a little bit sluggish prior to the official cash rates coming off in February. So we've had 2 cuts to the official cash rate, and sales have picked up a little bit. And so investors in that Yalambi loan will start to see returns of capital.
Yeah, just to add to that, we had 2 returns of capital last month for Yalambi, and we expect maybe 1 a month going forward. So that is expected to wrap up in September. Might be a bit sooner, depending on the sales rate there. And then that leads us well into Sanford Rise. They've built 19 residential land lots there, 1 acre, and that again was a bit sluggish there. Got the rate cut in February, and they've sold 1 a month since then. So we expect, we've just, for those who are in this one, we've just rolled this over, and we expect once a month a return of capital for that one. So the residual stock deals, they are something to look out for. If you don't mind a little bit more paperwork with the returns of capital coming in, again, there's just that marketing risk you talked about, no construction or planning. So residual stock deals are something to look out for investors.
And Xander, talking about paperwork, while we're giving the update to investors, can you provide an update on the real estate credit fund?
Yeah, so the real estate credit fund's going really well. We've talked about 5 categories of loans. We've got industrial, commercial, residential, land subdivisions, and residual stock deals. If you can't pick which one you like the most, or you're not sure about one of them, we've got the real estate credit fund, which invests in all the loans across the portfolio. So you've got that broad exposure. You're always invested. We've talked about Tingalpa, that's going to be finishing in approximately 3 months' time. Or we've got Brookwater, that's just a new loan. But if you don't want to worry about the duration of the individual loans, the real estate credit fund is a great place to go. We've just upgraded our registry system. So for the real estate credit fund, you will have the opportunity to reinvest your distributions in that. So if you were looking to grow a position, the real estate credit fund and get that compounding effect, the real estate credit fund could be a great place for you. We've got biannual withdrawals on that. So we've got the 15th of March and the 15th of September. You've got to give a month's notice for those. And the real estate credit fund's paying 9%. The reason that it's a bit lower than the other loans, like 10% or 10.5%, it's got a bit of a cash drag for those possible redemptions coming. So for those who's wondering why it is a bit lower, it just has that cash position. But anything you want to add to that, Joe?
Now, look, I think you've summarised it well. Look, if you can't choose which one to loan to go into, the real estate credit fund, it's set and forget. You can stay invested all the time. You're getting diversified exposure. And I really like the concept of reinvesting your distributions. You can choose to reinvest all of your distributions or a portion of them. You can start to build a position in the fund and start to get that compounding effect. So if you are interested in the real estate credit fund or any of the loans that we've spoken about today, please contact Capital Property Funds on 02 8004 6218 or via email at registry@capitalpropertyfunds.com.au. So thank you for listening to our July 2025 update. I'm Joe Christie, and this is Xander Ryan, and thank you.
See you next time.
Yeah.